Hello, my friends. True or false? Day trading is easier when you have a reasonable expectation of where the market is going. Of course, the answer is true, but when can you have a reasonable expectation of where the market is going? Trade setups offer an indication, but there are some problems with trade setups. First of all, a lot of traders don't even take the time to learn trade setups. But there are only 6 trade setups, so how difficult is it to learn 6 trade setups? But nevertheless, many people don't even take the time to learn them. The second thing about trade setups is the timing involved in a trade setup. Timing a trade is difficult, if not impossible. In fact, losses are often caused by a trade made on a good read of a trade setup that should have been profitable, but instead, because of price volatility, prices back up and reverse, hit the stop, get you out of the market with a loss, and then reverse, go in the direction of the trade, and the trade that should have ended up as a profit ends up instead as a loss. The third problem about making trades based on trade setups is that many people don't have the patience to wait for a good trade setup. So they overtrade. And much of the overtrading is because of losses occurred where the trader tries to recover those losses and ends up making multiple trades and making the loss even worse. My suggestion is not to trade every day. Make fewer trades. Wait for the really good trades. Really good trades don't happen that often. Maybe 2 or 3 times a week. Now, this strategy will lead to far fewer trades, but more profit. This also eliminates the timing problem, but you'll have to throw the 1 to 2% stop loss rule out the window. Some people might not agree with this, but I'll show you that it can work and I'll prove it to you. So how do you make fewer trades and yet make more money? I look for the super setup. To me, the super setup is the gap trade. That's one of my 6 trades, based on days when the setup is not only obvious, which it is by nature, but when it's caused by pre-market price action that has no explanation. The super setup, by the way, also has to agree with my daily trading zone. I'm going to give you 2 examples of super setup trades. Now remember, I said that a super setup was a gap trade based on pre-market price action that had no reasonable explanation, and the setup had to agree with my trading zone. So let me show you what I mean on Thursday, November 17th, and Friday, November 18th. I'm showing you the market calendar for the 17th and the 18th. And notice that pre-market, there's really nothing, there's no news that is going to motivate the market going up or down. There's no major announcements, but I'm talking about pre-market earlier than this. Let me go over to my chart. This is the E-mini chart, and I have my cursor set, look at the bottom of the screen right here, Thursday, November 17th, 2 in the morning, 3 in the morning, you see? The market is trading at 39.87, and it comes in, prices come into the market from 3 in the morning onward to our open at 9:30, and here's my trading zone right at 9:30. From 3 in the morning, where prices were trading at 39.88, to where they opened at 9:30, and they're trading down here at 39.21, about a 67-point drop pre-market. No reason for it, okay? And here's my trading zone, okay? And here is the gap. So here's the gap, the previous day's close, right here at 39.69, and my trading zone, as you can see on the chart, okay? Very visible, very easy to see. The gap trade, very easy to see, okay? It's the gap trade is from the open here at 9:30 at 39.16, and here is the potential, 39.68. Now, ultimately, prices did not close the gap, but I said that the super setup also had to coincide, had to be in agreement with my trading zone. Now, for those of you who don't know what the trading zone is or how to use it, trading zone is a calculation based on Taylor's trading technique. George Taylor developed this system of measuring the market 75 years ago, and it's still in use today because the numbers are still valid today. And most Professional traders use these calculations to gauge where the market is likely to trade and the range through which the market is likely to trade. In other words, a support number, a resistance number, and a range between the two of them, okay? So on the morning of November 17th, the market opened 53 points down as a gap trade, a potential gap trade. So I waited for the morning, and here's the super setup. I waited for the morning to see where if prices are going to trade toward my gap, to close my gap. And sure enough, as the day progressed, the market did vacillate, went up and down. Just for reference, there's 5 points between each horizontal line on this chart. So the market, when the market opened, it went up about 15 points, then dropped 15 points, went up 20 points, then dropped 20 points, but not quite as much of a drop as previously. So the market had indications that it was going to head up. I took the trade. But I also did something else. My trading zone didn't comport to 53 points. So I'm going to show you what I mean. I'm going to take my trading zone, I'm going to copy it, and I'm going to paste a copy of the trading zone to the intraday low, to where the market opened, right down here, okay? And I'm going to now look at my trade, and I'm thinking that the market is probably not going to close the gap. It's going to come close, but it's most likely going to fill my trading zone. And where did prices end up? They certainly ended up right at my trading zone, maybe a few points above, but they never closed the gap. And this was my trade. The super trade, the super setup, was the gap trade caused by the pre-market action with no reasonable explanation for it. And they fit within the parameters of my trading zone, okay? So that was the trade for the 17th. And on the 17th, this trade was good for, let's see, from my gap, my trading zone, the support number was 39.17, resistance number was 39.58. So what's that? A 41 point profit. Not too bad, right? 41 points. Now the next day, November 18th, a Friday, the market, pre-market, was trading at 39.50. And by the time the market opened, the market was trading at 39.90, a 40-point increase. I've already showed you the economic calendar that indicated no reason for this 40 points increase, right? So here's how the day set up. The previous day's close was down here at 39.56, and the market opened up here at 39.90, a 34-point potential profit, or to close the gap. But my trading zone, I should say, was down here. So I take my trading zone, and again I transpose it. I'm going to copy it, and I'm going to paste it to where the market opened to get an indication of where the market was going to trade, where it was going to end up. And my trading zone agreed that the market was indeed going to end up around 39.41. So in addition to closing the gap, the profit potential was even greater, down to 39.41, which in fact occurred. So these are two back-to-back super setups that in one case earned 53 points profit and another 40 points profit. Now, the reversals are something that you have to take into consideration. And as I said in the earlier part of this video, you have to throw the 1 to 2% stop loss rule out the window. But trading these super setups, very profitable. You have to wait for them. You have to be able to read them. You have to have the trading zone to confirm it. And you also have to have a sense of how the market is moving. So that's my video for today. If you use patience, learn the trade setups. Certainly the super setups are not suitable for everyone. But if you paper trade this and try it out, you'll see that you won't trade very often, but the trades that you do make will be very successful. And if you want to confirm it by getting a subscription to my Trading Zone report, I calculate these numbers each evening, send them out to my subscribers. You can use the Trading Zone in conjunction with these super setup, trade setup patterns that I'll show you, that I have shown you. and you can turn your trading fortunes around. So that's my video for today. Marv Eisen for Timeless Dollar Trading Academy. Thanks so much for watching. Trade safely, use lots of patience, and I'll see you in my next video.